Welcome to the Property Couch, where each week you get to listen to two of Australia's leading experts. Bryce Holdaway, co-host of Location Australia on Foxtel's Lifestyle Channel, co-host of Escape from the City on the ABC, and partner of Empower Wealth Advisory. Ben Kingsley, chair of Property Investors Council of Australia and the founder of Empower Wealth Advisory, named the 2018 and 2019 Property Advisory Firm of the Year. Stay tuned as they bring you the insider's guide to property, finance and money management.
All right, folks, welcome back to the Property Couch. Hello, Ben. How are you?
Good, mate. Yourself?
I'm very good. Hey, the last couple of weeks have gone really hard on protecting and advocating for our community, Ben.
Yes.
Really hard on trying to get people to make really good decisions because the market on the East Coast is sort of starting to move in the right direction again. And this is prime time for people to be sort of making decisions. And we want to make sure they're building those decisions on a house of stone, not on a house of sand. But I read out one of my Instagram followers last week, Thenie and Jace, and this is what she wrote. My jaw dropped for 3 intersections and my eyebrows almost disappeared into my hair whilst driving home today. I was not expecting to hear my message that I wrote. It's something that I really do feel strongly about. I met a couple on Instagram who dedicated their account to, I'm not going to say it, they bought a house and land package each. One of the blocks of land has taken years to title, and in the meantime, the builders have hiked up the price of the build as the fixed price expires every so often. I showed them your podcast and linked to the Picker website. Now, what I'm going to do, Ben, is I'm actually going to read out a post on that person's Instagram. I'm not going to say who it is. I'm going to protect the innocent. It is public forum. I haven't asked for permission, but there's some good learning in it. But let's protect the innocent.
Here we go.
By not disclosing names. Hey, okay, warning. Huge rant in capital letters. I'm approximately 1 month off settlement. Let me repeat that. 1 month. When I purchased my land originally 3 years ago, the contract stipulated there was no, in capital letters, easement. I've just been informed by my conveyancer today that the developer has placed a 2.5 metre easement at the rear of my property.
Oh, God.
My lot is very small block and my house was meant to finish 1.1 metres away from the boundary line. Can't do that if you've got a 2.5 metre easement. My house will not fit on my block anymore. And if I were to build a single-storey home on the block, I can now only fit a 2-bedroom home on there. So I've called my builder, whom has tried to calm me down, although reassured me that I was correct in stating that my house would no longer fit on the block and it would need to be redesigned and requoted. Oh, and it'd have to be a double story if I wanted more than 2 bedrooms, Ben. Now, we all know how expensive you can get building a double story home, which I don't believe I can afford. My options...
Add another 100 grand, Boris.
Yes. So my options are... You good?
Yep, sorry.
My options are sit on the block of land for a while, forfeit the $10,000 builder's deposit, hold off on having a family, etc., which isn't really an option for us. That was option 1. 2, build a double story with her partner, which I'm not going to say, and move into, although this was never intended to be in our plans, and as we wanted an asset each to fall back on. 3, build a 2-bedroom single story, in brackets not even interested. 4, sell the block of land and forfeit the $10,000 builder's deposit. I've worked my expletive off since I was 14, trying to get myself into the property market, and it doesn't matter what I seem to do, it always goes horribly wrong for me.
Oh, that's very unfortunate.
That's terrible. So there's a bit of mindset stuff in there as well. But
there's heaps, but there's also, if you're promised non-easement on your block, get it in writing. Put it in your contract. These builders, these developers change the plans. It's written into the contract that they have the right to do so. When you get a contract legally vetted prior to signing anything, you get your conveyancer or lawyers to strike out that clause and include a clause to protect yourself. That's where advice pays. And I'm sorry to hear that story.
It's a terrible story.
Because...
But the challenge is that, folks, make no mistake, if you are buying something that is not yet built, you take all the risk.
Yep.
You take all the risk. You take the risk of that happening. You take the risk of a sunset clause. You take the risk of the developer changing his mind. You take the risk that the developer realises they're not making money, so at 2 a.m. in the morning when they realise that, they're with their architect and they press a button and they shrink everything by 15%. You just take all of the risk of someone else being in control of your destiny versus being able to buy something yourself. So we got a question a bit later on, Ben, that we're going to talk about. But folks, We are on a vendetta to protect the people who are buying properties. We recently, Ben, had someone reach out to us on socials, and they were so excited. Photo at the front of a house. Ivor sent this to me. They look so great. And at the bottom, they said, "Thanks to the @Property Couch," just if anyone wants to follow us on socials, Ben, @Property Couch, for teaching us everything we know about property. Mate, I was just swollen with pride that there's absolutely zero commercial agenda for us in that. We've never met them.
No.
We don't know. They haven't come to our business to the best of my knowledge, but we've been able to create a legacy to help these people. So, folks, if you are thinking of buying investment properties, please listen to all of our episodes regarding asset selection. I also, Ben, spoke to someone who was referred to me by an existing client this week, and they said to me, I am about to buy a new house and land package in Sydney, and I'm about to buy a new house and land package in Melbourne. And I just said to them, look, I'm not going to sugar. I've had way too many of these conversations, Ben, over 21 years, to not go straight to the point now. I just say, okay, my first question is, are you locked in to that particular purchase? And the answer was, I've put up $1,000 deposit and I'm about to sign the contract. So I said, all right, I've got a small window here.
Yep.
So I said to them, for the avoidance of doubt, I do not recommend that particular property you proceed with. And if that's something that you don't want to hear, this conversation isn't going to be that helpful for you. In this person's credit, they remained open to my discussion, but then said to me, I've got a really great relationship with the developer, and I'm not just, that developer has told me that there's shopping centres coming and there's infrastructure on its way and there's lots of people. And so all I said to him is, the best I can do is I can send you a link to a podcast, one of our episodes. Have a listen to this. If it resonates for you, come back to me. If it doesn't resonate for you, well, then you're not going to come back to me, right? But the point is, folks, how you can help us on this crusade is if you believe in what we're saying and you believe in some of the stories that you want to help people avoid, take a screenshot of the podcast on your, even works on an Android, doesn't it, Ivers?
Oh, cheeky.
Did you hear in the background there? I just tried to, that's the only way I can get her to participate in. She's steaming over there. Wow. So take a screenshot.
I think my next phone's going to be Google, just to...
Yeah, I know that is. You're a commissioner for Google, as I'm a commissioner for Apple. I get it. So take a screenshot and post it on your socials and tag someone you know that needs to know that particular episode, just to help them out. So
Bryce, I've also, sort of on the back of the last couple of weeks, I've been out and about.
Yes.
I've always said simple, right? If the regulators listening to this, make property investment advice legal, right? In terms of you have to make it regulated, regulate the property investment market, and then you won't have these brokers and so forth. But one of the particular brokers who I caught up with last Friday in Sydney was telling me the story that this particular developer, can privately fly them in their helicopter out to the, Hunter Valley, Newcastle area. And basically, as you land, he's got a couple of Ferraris and things in his hangar. Wow. So he's got a few things going on. And he says, and his story goes along the lines of, I'm a simple man. I don't know much about, demographics and changing things. But if a Bunnings is setting up in an area, I just buy as much land as I can and I lay 1,000 slabs, right? And then I get people like you, Mr. Broker, to sell these, and you get a commission or a kickback or a so wow, that's pretty good. Pretty good for the guy who's got the shed full of Ferraris and Lamborghinis and the private helicopter. So he's making a bit of coin out of it in terms of what he's doing. So my question is though, if you one area he's laying 1,000 slabs. That means, does that sound like tight supply to you, Bryce?
No, it doesn't sound like tight supply to me, Ben.
So ultimately, the people who might get in first in stage one, the values might,
usually.
So again, we've said it is not carte blanche. Not every house and land or off-the-plan apartment is a bad one. It is not the case. We've always said, if you've got uniqueness, if you've got uninterrupted views, if you've got character and charm in what's going on, if the design has been laid out for really strong owner-occupier appeal, and you're still going to get hit with lots of ongoing holding costs if you're in a big apartment block. We talk about lifts, we talk about gyms and pools and blah, blah, blah. So you won't get any income from it, but you might get some capital growth. So that's our story there in terms of this is why we are on that crusade, and it's why Picker was set up. And there's, the other big news of the week was the announcement in Queensland, Bryce. Queensland, about their new tenancy laws. and what they're going to be doing there, right? And basically, it's almost like a tenant in Queensland can stay for life. Remember I was telling you about in Italy? You know, once a tenant's in, you can't get rid of them until they die, right? If they want to stay. So ultimately, you know, you may not want to have to sell that property, but if you've got a difficult tenant or a bad tenant, so the asset owner is now getting to a position where they're being marginalised, and they shouldn't be marginalised. I agree there needs to be some reform, but that type of reform where it says after the anniversary, so effectively the term of the lease is now irrelevant based on this idea that the Labor government in Queensland have come up with. So I just find it fascinating. So that's again why you know, we've seen our PICA members in Queensland put some information together, our State Advisory Council up there. So this is the reason why we need everyone to join PICA, because if you're making this huge investment, hundreds and hundreds of thousands of dollars your money, and you can't be in control of the asset you're going to buy, yet that asset serves a really good purpose in terms of providing rental accommodation for people who need that rental accommodation, then I don't understand why it is the case that it is. So more to be said on that in the new year. But you know what? They've got a consultation period that goes to like the 18th of December. So they're back end of the year, no one's really focused in on it. And I also found out that the tenancy associations, Bryce, get funded by the governments. So all of a sudden they've got millions of dollars or hundreds of thousands of dollars of government grants and money that's coming in. And so they're lobbying hard, they're advocating really hard on, don't mind that, but here we got nothing. So, you know, we've got to be able to build up that war chest to be able to also put a strong case forward on behalf of the people who actually own the assets. And I think that's an important message. So a lot more will be said about that, and I keep coming back to it. Property investors are going to be marginalised more and more and more from the regulators, from the government, from the lenders, because they don't want you to have 6, 7, 8, 9, 10, 20 of these things. And I hope they'll still let us have 3 or 4 good ones.
Yeah. So you can almost hear the talk of that guy when they fly him onto the estate and they land the helicopter and they see the Ferraris. You can almost imagine the motivational speech, isn't it? You go, you know, mate, see the helicopter, see those Ferraris. If you continue to work hard and you buy one of my developments, guess what? I'll be able to buy another one next year.
And I'll give you a clip of the ticket. Here, there's $15,000 in every client who says, I want to invest in property, and they get to the mortgage broker, and the mortgage broker says, I got this guy, he's a good bloke, he's a good Aussie guy, he's very successful. Funny that. And you're going to buy. It only takes an hour of research, Bryce, to work out what other people are paying for those properties in that estate compared to how much your property is loaded. Buying property in house and land package is so easy. It's so easy because it's a calculation of per square metre of land and per square metre of build, right? Add the two together, that's your cost. So do a bit of research, move away from that particular, and see what the land is being sold direct from the actual owners of the land, as opposed to these people who subdivide and then load the values on top of that.
All right, can you hear the passion, folks? We want to protect you, make sure that you make some good decisions. Hey, a couple of things. Last one for me, Ben, really is I told folks last week about how they're going to get their hands on a free copy of our book, Ben.
Oh, okay, yes.
We've got a Black Friday's coming up, Ben.
Oh, a little bit of a Black Friday special.
So, folks, stick around.
Okay.
We're going to show you next week how you can actually get your hands on a free copy.
We might have a couple of little Black Friday specials next week. Watch this space. Sounds good.
All right. So, but folks, in the shadows of Christmas, being able to get your hands on some of these materials, I'm flagging, Ben, that there might be an opportunity to get a free book. So stick around next week. We're going to show you that. And on the free book, makemoneysimpleagain.com.au. If you've listened to us say that for the last few weeks and you haven't done it, folks, come on.
That is a free book right now.
It's a free book right now.
Choose your adventure.
It's a digital book.
Yes.
So next week I'm going to talk to you about a physical one that goes in your hands. It's going to help you with your Christmas festive season reading.
Yep.
All right, my Mindset Minute today.
What do we got?
Whenever you're talking to someone, Ben, are you more interested when they're talking to you about things or experiences?
I love a good story, Bryce. Yep. I like a good story. And I'm a good listener if I'm interested in the subject matter.
Yeah, well, we got.
And I'll be honest with you.
So you're running for Parliament with that answer because you just was called.
No, it's being honest, right? If someone's sitting there talking about, I don't know, love at first sight or married at like, I'm just like, how do I get out of this room? How do I get out of this conversation?
Poke my eye out with a sharp stick.
But if it's like,
ABC show, you're in.
Or how about, nuclear power? I'm in.
Oh.
If someone knows more about, I'm in. Like over here. So cheap energy, I'm in.
You're in. The bloke in the White House, you're in.
No. Well, I'm fascinated by the study of global warming. I'm in.
Yeah.
Fascinated by the study of human behaviour. He's smarter than I give him credit for.
Oh gosh.
He only
he's
went
the greatest marketer on earth.
He's very clever, but yes, he's not a good man.
Point of my story, right? I've got some friends who are South African. They were telling us how they went because Andrew's about to turn 40 next year.
Yep.
And so we're planning on what
21.
That looks like. 21.
21. Yep.
And so
21st.
So I've said to her, what would you want? And Andrew's not a party girl, right? So. Yep. Having an idea of having a party with her being the centre of attention is really right up there with poking her and I out with a sharp stick, right?
Right.
So I said, all right, let's plan a holiday. So the friends were telling us they're from South Africa and they built the dream because I've always wanted to take the boys to the Serengeti in Africa, show them the Big Five, and then. But there's always this tussle because Andrew, I just want to go on a beach and get the sun.
Flop and drop.
So they were building the dream about how they went to South Africa and they took their stories through and we were intrigued and they went back through Mauritius, got the beach on the way home. And the same couple are renovating their house, right? Mm-hmm. And they're really passionate, excited about it. But I can tell you I can remember the stories about the adventure more than I can about the story about the things.
There you go.
So see, I gave you a little run up there.
Nice.
So Zig Ziglar, one of my favourites.
Yes.
Says, fill your life with adventures, not things, Ben. Mm-hmm. Have stories to tell, not stuff to show.
Correct. That will bring happiness. Material things do not bring happiness. Experiences move the dial on how happy you are.
Fill your life with adventures, folks, not things. Have stories to tell, not stuff to show. Ivis.
Beautiful.
There you go. Ivis is actually pretty good like that. You're not a things sort of person, are you? You're an adventures girl. Ivis is always on a plane, always going somewhere.
Yeah, she's a traveller like the rest of us. Yeah, she loves a bit of adventure.
All right, Q&A day, Ben.
Q&A.
So let's kick it off.
All right, what do we got?
First one here is from Brodie.
Okay.
Hi guys, love the insights I've gained and I feel you've saved me thousands. My question is around new property. I understand buying off a plan is a bad idea as an investment, etc. However, my partner and I would like to buy a house for the next 10 or so years to raise a family and everything that comes with that.
Nice.
I'm a building designer, so I'm a bit more biased towards building. So my question is, would building a house with an outlook to live in it for an extended period, in brackets 10 plus years, stack up to buy as over an existing property?
The answer to that, in short, is yes.
Scratch the itch?
Absolutely. I mean, where we want to articulate our differences here is that this is a lifestyle choice. So if you're buying for lifestyle, then I'm all in.
Yeah.
I mean, that's an experience, right? You're going to build memories in that house. And as a building designer, Brodie, exciting times for you, right? If you can get that marriage right with that open style and the sort of the al fresco deck, and you can really get that blend of a great design that has strong owner-occupier appeal. If you ever choose to sell it, then I'm all for that. The only caveat I have is around where you do that. So if you're doing that in a brand new estate area where you know that there's acres and acres of vacant land, and that's going to take 20 or 30 years to absorb, just be mindful in those particular locations, your capital growth may be a little bit more sluggish than what it would in regards to if you're in an established area. Because remember, the appreciation is in the land. Now the home gives me some emotional value, so I might get some intrinsic value out of the asset if you've built it well and it's unique to the other Lego houses that are in the street. That's where you get that that uniqueness and attention if you do choose to sell it in 10 or so years' time. So we love the idea of people choosing lifestyle if that's what they want. So same, I sit down and have a chat with someone as a client. What's the big rock in the jar? Oh, we really want this dream home. Great. Let's go dream home first. And let's get that out of the way. Scratch the itch. Right. And then let's plan out when we're going to buy the next investment property. Let's put a target on when we can get to that next investment.
Are you familiar with Marie Kondo, Ben?
Yes.
What, in terms of part of her philosophy is tidying the house, right?
Yes, that's her big
the magical
thing.
art of tidying up or something. But one of the things she says is grab the item, and usually around clothes, right? And ask the question: does it bring me joy, or does it not bring me joy?
Yeah, I've heard you say that before.
And so it's kind of the same thing here, right? Is this isn't what we're describing here from Brodie is not an investment decision. It's a decision about will this bring me joy, or will it not bring me joy? Because the same logic could be applied to what we're saying here is a holiday. Well, I don't know many holidays that are an investment, Ben. They're an investment in your self-esteem and your mental health and all those sorts of things, but they're not an investment that gives you return.
But they can be priceless, can't they?
But correct, right? So it's sort of in the same category, and I can understand why a lot of the discussion points that we have on this podcast can create confusion around this.
Yeah.
Because we are assuming that all of the frameworks that are coming up for us is the pure intention is for it to be an investment.
Return on investment.
Not for it to have some form of joy in your life. Because we had a question like that last week or the week before as well. So I wanted to reinforce this point that if you want to live in it and it's part of a community and you're surrounded by your network and that network brings you joy and all those sorts of things, that is totally separate to the fact of whether I buy it purely for an investment. With the caveat that you said before, if people, it's often for a lot of people the biggest amount of cash that they will ever outlay, so it's probably not a bad idea to have some form of capital growth prospects in mind, but don't let that, rent vesting on paper is the best thing to do, Ben. It just makes sense mathematically. If you live in a vacuum and you don't have a heart and you don't have an experience and you don't want to experience all that life has to offer, but when you live in your own home, there's a peace, there's a sense of you just can't describe that a mathematical equation on paper can't actually solve. So
my home is my castle, Bryce. You know, the famous Castle movie, exactly that.
Tell him he's dreaming.
Tell him he's dreaming.
Let's go straight to the pool room.
So
keep going.
So even in some of those new estate areas, each parcel of land can also be unique. Like if it's in a court, so you do have some scarcity if you're in a court, right?
Yes.
No through traffic.
The principles apply.
Right,
so Veronica always says to me, it's like house and land estates are like office works. You just go and you pick something off the shelf, you match the two things, you put it in your trolley and you walk away. Because what you're doing is you're picking a piece of land, then you're over here in a catalogue and you're sort of going, well, I take that house with that plan, and then you just make the two. And then it's not until later you realise, ooh, I could have actually got that one with a north-facing orientation. Ooh, I could have actually designed the house to actually take advantage of that aspect, all those sorts of things, because it's usually, not always, but usually early on in our property ladder experience, so we don't know those lessons until we're looking in the rear vision mirror.
So we trust you, Brodie. You're going to go out there and you're going to find that right parcel of land and you're going to do a great building design that maximises the advantages of that block. Go forth and conquer, my friend.
Yes, enjoy, Brodie. Send us a photo of Christmas lunch at your place with all your loved ones around you. So go for it. Hey, this one's from Emily. I love your podcast and only recently discovered it finishing your book. I'm currently up to episode 70 and can't get through them quick enough. I am 25 and just finished university in an accounting degree. Ooh, sounds a bit like
That's good.
And now have 3 investment properties and a 4th due very soon. That is epic. 25. Wow, Emily, you need to come on our summer series. I have a question regarding property investment software. I hope you can answer. I'm wondering what software you recommend for keeping the administration side of your investment properties in check. From what I can see from Google searches, many of the software packages already available in the market are for the do-it-yourself property manager, which advertises its features to do with the collection of rents, scheduling of inspections, and communications with tenants, etc. However, in my personal experience, hiring qualified property managers is the best, most reliable way to go. So these features are useless to me, Ben, as this is already taken care of. My question, therefore, is there any software available like MYOB or Xero tailored to property investing that we can input our property costs, including regular maintenance, scheduled bills, and buying costs? Ideally, I'd have a different project or account for each property, so in the 30 years when if I choose to sell, the cost base for each property are easily worked out to determine the capital gains liability. I love your work and I love listening to your podcast every day. Thank you for making such a huge difference to the lives of the little guys on the ground. Kind regards, Emily. Wow, Emily, 25, almost 4 properties and an accounting degree. That is a very, very bright future.
So, look, I mean, yes, there are software packages out there. I've chosen not to use them.
Me too.
I don't need a subscription-based.
Bill Gates has provided us with some software.
Yeah, it's called Excel. So I keep it real simple. I have the address of the property at the top. I have sort of 2 very simple columns. One is capital cost and one is maintenance and repairs. And if something comes in, I'll write the item in the item column, and I'll say, oh, I think that's a repair. If the accountant tells me it's not, then I put it into the capital cost base. So, but Bryce, so that's as simple as it needs to be, right?
Yeah.
I mean, I then, I'm a little bit old school in the sense that I run, each year I run a tax folder, and I just throw the receipts into a tax folder, right? I haven't taken photos of them and stored them digitally.
Folks, I've tried to get all made up.
I'm getting close. I know it's not far away. I've only got the one filing cabinet at home, so I just toss the old tax return go, and because I do have records of it in Excel.
Yeah.
But I can also say to you, Bryce, is that the My Wealth portal, the TPC Money Smarts portal, right? Yes. 2020 is going to be a big year for that portal, and I can sort of let everyone know I've got a special thing coming up, as I sort of alluded to a couple of weeks ago. So there'll be a little bonus episode on this launch of what I'm talking about before Christmas.
I'm sure you're charging thousands of dollars.
No, it's free, Bryce. It's free. It's all free. Get on there. But I am inspired to potentially build a property portfolio piece into that portal. So, that's 2020. But in the interim, because we're never going to charge for that, in the interim, just use the Excel spreadsheet. It's a good one to start with.
Google Sheets.
Yeah, because what does happen is when you go to your account now. So here's the thing: Emily probably does her own tax returns.
Well, it's part of Money Smarts too, isn't it, Ben? So because all of the bills are paid, it's all coming out. So it's all integrated into the Money Smart system. So it's all a recording system. And if you think about if the property manager pays all the bills for you, so get them to set that all up for you, because it's part of the Money Smart, so you can run out of cash.
Yeah.
And then with one exception, don't let the property manager pay your insurance. Make sure you take control of the insurance payments, because if they forget that and you're not covered, that's a disaster. So take ownership on that. Then, as you said, just have a basic Excel spreadsheet. Get on with life. Because,
Emily, you might probably, I know my accountant uses Excel. Sorry, what am I saying? My accountant uses MYOB originally. Now I think he's moved over to Xero. So because he's already got that platform for all of his clients, he doesn't cost him any extra, right? He's not paying anything for a subscription based or an upgrade or whatever it is. Now, obviously you're an accountant, right? So the thing for me and the thing for the majority of us who aren't accountants is we have our own spreadsheets, but when we go into the accountant's office, they also have a record of it as well.
Yeah.
So if we stay with the same accountant, or if we move accountants, we can get all that information, and that's passed over to our new accountant. So from my point of view, it maybe is a little bit
Emily,
unique.
there are people who are more sophisticated than Ben and I, but we take the old keep it simple approach, because we're in a system of 10 minutes a month. And in the upcoming summer series, Ben, there's one of our interviewees.
Yeah, special guests might be good.
Special guests. I've said it for 250 episodes. I just got stuck for words then. One of our very special guests. Thank you, Ivis, for encouraging Ben over there. I've lost my train of thought. They're both chartered accountants.
Yes.
And they run their entire life through Xero. Like that's
cool.
That's one end of the spectrum. That's not where we are.
No.
We're down this end
we have
Money
specialists.
Smarts.
We have our A team of professionals, and we give our pieces of paper and our Excel spreadsheets to them, and they do the magic.
So we're going to inspire those folks who think that you need to be really sophisticated. We're going to really disappoint all those sophisticated
2020,
folk.
and I might even call in when I get time for that project, property portfolio, maybe something unique like that.
Yeah.
I might even put a shout out there and get a working group together, so we maybe design it with the community.
Oh, that's
a bit of
great
fun.
news.
So anyway, watch this space.
Yeah, there you go. All right. Well, 2020 is going to be a good year. All right, Ben. Got one here from Alan.
Yes.
Regarding loan structure. Dear Ben and Bryce, big fan of your show. Question in terms of an offset account. I have an offset account on my investment property. Currently, I'm living at home and is looking to purchase the second investment property. I am wondering, here's the question, Ben. Do I need to set up another offset account? I don't want the loans to be interlinked. Your faithful listener, Alan. Alan, good question. You hand it to me.
It's a layup.
It is a layup. You don't need to have another offset account. Really what you want to be doing is making sure the offset account is against your most expensive debt. So what will happen here is you may get a second purchase, and like you, Ben, like me, I've got loans that have got different interest rates. So I just think of this ladder, and it's leaning against the wall, and the ladder is the offset account and the wall is the loan. Just lean your ladder against the highest wall, because the highest wall is a symbolic for the highest interest rate. And once that bucket is full, then you pivot, Ben, and then you have a little look around your portfolio and you go, where is the next highest wall? because I'm going to get another ladder, i.e. another offset account, and I'm going to lean that offset account against the next highest wall, and you continually do that. It's like the little Google worm. I've said it before. Every night they wander around looking to see if there's any new websites. You're just wandering around seeing where is the most expensive debt in my portfolio and leaned up. For most people, Ben, it is their principal place of residence because there's no tax deductibility.
Correct.
They're the only ones paying it. But if you've paid off your home and you've got an offset account against investment property, put it against the most expensive debt.
So, Alan, it's a very simple question. You don't need to have multiple offsets against each of those properties. In other words, if a bank wants to charge you $5 or $10 for the privilege of an offset each month, then don't necessarily do it. Bryce is 100% in regards to highest debt gets the offset, because ultimately, when you do your tax return at the end of the year, if it's a loss, it's an accumulated loss. They don't care which loss of which property it's against. It's just the sum of all of that in terms of what's reducing your taxable income. So that's the message here. So I like to think that all money goes into the primary offset against that higher interest account. Don't set up the second one if you don't need it until that bucket's full. If it's free and it's easy to be used, then do it. Because what you will find, Alan, given your rent vesting by the sounds of things, or rent homing.
What do we call
home
that?
vesting.
What's that called?
Home vesting.
Kipper vesting.
Rent vesting, it's home vesting.
No, it's kipper vesting.
Kipper vesting, there we go.
Kippers. Kids in parents' pockets eroding retirement savings as a kipper.
So that's what you want to do. So what's going to happen is you might find that you have to have lender A, lender B, lender C as you grow, and if you do get more borrowing power with one lender, that you might get charged the privilege of getting extra money out with a higher interest rate. So that could be the one you want to go after. But, I would also say, some people might be going, so do I have to go with a loan that has an offset versus getting the next property? Remember, the offset is a bonus. It's not going to stop you from doing that additional investing. So by way of means, if I can get an extra $50,000 or $80,000 in borrowing power from a second lender but doesn't have an offset account attached to that particular product, but I do have an offset accounts to the original product, then I would still go after that money if it got me a better asset in a better location that I thought I was going to get greater capital growth out of.
Well said, well said. Hey Ben, I forgot to say earlier that not only is it Q&A day, but it's actually Stig's Q&A day.
Oh.
Because she actually just passed us these questions as we walked into the studio
this morning.
She handpicked them.
Very nice.
Just to show the amount of prep in advance. So we are doing these raw and live, folks. So Stiggy's Q&A day. Last one here from Chris. Now, the reason I set that up, Ben, is because you're going to need a little pen and a paper on this one, because there's a few numbers going on here.
Right out and get me
calculator. So I've had a very quick read through it, but let's do this on the run. You ready?
Yep.
All right. Thanks, Chris, on Facebook. Also about offset accounts, Ben. My current home loan is $350,000. Property value sits around $400,000. This is not our forever home, and we bought to get on the property ladder. We would like to buy our next forever home, Ben, in the next 4 years and rent out my current home. Current interest rate, here's where your pen kicks in.
Rightio.
Current interest rate is 3.23%.
Got it.
On a standard home loan. No offset.
Okay.
Bank of South Australia. Tick. Current savings for me and my partner sits around $45,000, which currently earns us around $500 in interest a year.
Interest earned, yes.
In an online RAMS saver account.
Right.
That goes up around $20,000 a year. Good savings record.
Good savings and a good money smarts.
With a goal of reaching $100,000, Ben, by 2022.
Nice work, crew.
Okay. It goes on to say, I spoke with my mortgage broker and he came up with the following change in home loan to add an offset. Here we go. Bank of SA, 3.28%. So slightly higher. So with an 0.05%
increase
higher.
For the privilege of an offset, yep.
With an annual fee of $395, Ben. With $45K in the offset, that should work out to an annual saving of $905 per annum, I think.
Yep, thereabouts.
Everyone tells me to get an offset, but am I getting ahead of myself, Ben? Here's the big question.
Yes.
I feel once I add on the annual fees and take into consideration I won't be making any interest on that $45K, Ben.
You won't be.
I will actually be costing myself on my current situation. Or can anyone recommend a better home loan that I should look into? I would love to have multiple offset accounts, but they seem to have higher interest rates. If we add all our money in all our accounts, it would sit around $50,000. All right, Ben, there's a heap of teaching in this one.
There is. So first of all, we're earning $500 in interest per annum, which we haven't adjusted the tax for, Bryce.
Oh, yeah, because that's
when you
money earned.
Correct.
Not money saved.
Now, we don't know Chris's household income. We don't know what income ranges or tax rates they're on. So if I assume 40%,
yes.
Okay, so I got $500, okay, at 40%. So technically the tax man is going to take $200 of that.
Come on.
It leaves me net at $300, Bryce.
Yeah.
Okay, now, if I take the opportunity of the offset account, $905 that I would be saving, remember, this is not it's not income earned. It's savings.
Dollar saved is better than an income.
So there's no tax on that. Let's do that one more time. When you save interest, it's not income. So you never pay tax on that amount of money. So the 905 is net of any taxes, whereas
so think of that like, Ben, do you know how you always say your house is like, your dad used to always walk through and say, where we live in Luna Park with all the lights on.
Turn the lights on, turn the lights on.
So let's say your dad, right, he's walking in and you guys as young kids left all the lights on and his electricity bill was going to be $1,000 because you guys couldn't turn a light off. But because he walked around and turned them all off, the bill was $500 instead. So the $500 he saved wasn't income earned.
No.
It was just money that he didn't spend out. That's the same principle you're talking about.
Correct. And if you want to expand on that, remember that's after he's paid all these taxes.
Yes.
So in real terms, it's money well earned, right? If you give them 30% of every or 40% of everything you earn to the government,
so key point here, folks. Key point. $1 saved in your portfolio is better than $1 earned.
Correct. It's worth a lot more. A lot more. So 905 minus the 395 for the professional package that this particular bank is offering. Basically, if I do that, so $510. Yeah. So if it's $300 versus $510, I'm clear $210 per annum better off.
Drop the mic.
But it doesn't stop there, Bryce.
Okay.
Because there's a couple of things going on here. They're adding an additional $20,000 per annum.
Yes.
So that's only going to increase.
Yes.
Okay, so that's one piece. But the other thing, and the big clue that you gave me in Chris's great explanation, is it's not their forever home and they would like to turn their current property into an investment property into the future.
Key learning coming up here.
Rightio. So for those of you who are new to this game,
those playing along at home,
an offset account is a separate account from your mortgage account, Bryce.
So I'm not paying off my loan, Ben?
No. So if I've got money parked, i.e. the $45,000 parked in my offset account, Bryce, I'm saving interest, but I haven't paid the debt on that loan down.
Why is that important, Ben?
Well, Bryce, because if I then into the future take my $100,000 by 2020, which is what 2022 I should say, I can now go and park that big deposit on my dream home, which is my principal place of residence, which I don't get any tax deduction on, and my debt, it was at a higher level on my property that I've turned into an investment property. So in essence, I get more tax deductibility. Fact, it's a fact. I get more tax deductibility if I have a higher debt. So what a lot of people make the mistake of, and Chris isn't doing that, they're spinning that out into a high interest saving account, but they're paying a lot of tax on that. What most people do is they slam the debt down and then want to retain that property and turn it into an investment property. Well, that makes it less tax deductible. So you get your cake and eat it too if you do that right structure. So
shut the gate, folks.
Really important.
If everyone was in the studio right now, they would have just seen the wisdom bomb that you just dropped then. Because, folks, we're making light of a very, very serious topic. If you just got what Ben just said, that is a game changer. The amount of time someone's walked into our building and just gone, I wish I actually had known that little piece of gold way back then.
I was a victim of that. I came into my mortgage broker and said, look at me, when I didn't have a clue what I was doing when I was 24, 25. Look at how much I've paid off on the mortgage. Why didn't you put that in an offset? What's an offset?
Yeah.
What's an offset account? No one told me about an offset account. So I'm speaking from experience.
Yeah.
And you don't really also have to have multiple offsets either, right? If you've got a simple household structure where you've got one investment property and one owner-occupied property, our Money Smart system says just the one. If you can get multiple, that's great. Don't pay a premium for it though. because you could potentially your 7-day float you're living in lifestyle account could also be an offset, but not a lot of money's in there, so it's not a material amount. Given also how low interest rates are these days.
Yeah, what's a good rate for a term deposit in a bank? Are we clearing 1%?
On a term deposit.
Yeah.
Oh yeah, no. You're sort of still 2.5. So but term deposit, it's not at call.
No.
Right. So
so that's the point of that is the comparison is what's the percentage that I'm earning versus what's the percentage that I'm paying.
Correct.
And there's your first clue.
Yeah. Well, it's usually the margin's at least 1.5% in terms of what you can earn on a term deposit versus what you're paying on your mortgage. So, and remember that's interest saved, so there's no tax in that, versus interest earned that you're giving the tax man whatever your PAYG tax rate is.
And it becomes exponential too, because the more money that's saved in, interest is calculated daily, paid
Correct.
monthly. So then if you're saving more money, that means more is in the offset at the end of the month, which then becomes that snowball running down the mountain.
Your investment saving mortgage broker will know that story.
Chris, hopefully that's helped you and settled that. And it's a really good question, right? Because there's some people at home thinking the same thing, Ben.
Yep.
Thinking the same thing. All right, there we go, Q&A day, Ben. That was a good one to put in the bank. My life hack today is...
Life hack Bryce.
Ben, have you ever gone and cut and paste something from the web or something from something else?
Yes.
And you put it into your document that you're working on,
Yep.
but it's just big and bold and it's got the formatting that you had from the previous one?
Yes.
Park that thought.
Got it.
When you copy something, how do you do that? You can use the mouse, right click, copy, and then go to where you put right click, paste.
Yeah. Control V for paste or whatever
Well,
it is.
that's our old school. The new school would go Control V, right?
Yep.
To paste it.
Yep.
Well, I'm going to introduce Control Shift V. Why would I do that? Ivis, you'll like this one, I reckon. Because
it just brings the standard text across.
Whatever your format that you're currently in, it'll just paste it in the format you're in.
Oh.
Now some folks
I'm writing that down. Control V, Control Shift V.
I've got a clap from Ivis.
Is that you, Bryce? Did you come up with this one?
The amount of times that I've actually cut, because I use Evernote, right?
Yeah.
You know that.
Yes.
And I've gone and found something on the web that I thought, that'd be really good, and I cut and paste, and because I'm also annoyed by the fact the formatting sucks. So now when I realised that, it was a game changer.
So you need a keyboard. You can't do that on your phone.
Now the thing is, I know what Stiggy's like. Look what she's doing. She's over there and she's actually testing it.
Yes.
So, which is good. I like my life.
It's a game changer. So who gave you that bit of gold? Because you wouldn't have come up with that yourself, would you?
Mate, I just research stuff on the web. I don't have to just waltz in and just do one little segment. Like, did you know? I've actually got to be able to add.
So who do we thank for it?
Someone on the net. Someone on the net. Hey, did you test the lift yet? My life hack from the lift.
No, I haven't.
Okay, I want to see if anyone in the community has tested the lift one from a couple of weeks ago. So do you, I probably shouldn't embarrass you, but do you remember what it was?
I'm thinking about it. No, I can't remember.
You walk in, Ben. You hold the door. So close, don't take your finger off, and then
so
push
you
the
get
number of the floor.
Yes, see, I'm not that. See, I'm not that selfish.
Here we
go. I wouldn't do that to other people. Hence, I just made it leave my mind.
Okay, yeah, nice. Ben, did you know?
Right, did you know? I got a couple for you, Bryce.
All right.
4, 5 or so. That's a few.
Yep.
Off the web, of course. Off the World Wide Web. Dreamt, Bryce.
Did you dream?
Dreamt is the only word in the English language that finishes in MT. Dreamt. There you go. There's one.
That's a good one.
You ready for another one in sort of the English language and how you can play around with it a little bit?
Can I have a go at this? What your next one is?
Yeah.
Rhythm's the only one without a vowel.
No.
Oh, okay.
No.
Keep going.
No. If you put July to the end of November, you spell Jason.
You do.
You spell Jason.
You do.
July, August, September, October, November.
Got
Jason.
It. Nice one.
Nice one.
Ivis, come on.
There we go. Is
that news to you?
That's great.
Like I was just indulging him. It's like, mate, I think I remember that from grade 3, but you've never heard that
one? No, never heard that one before either. For our cat lovers out there.
Okay.
Oh, our cat lovers.
Go easy. Take it easy.
Yep, no, all good. 66% of their life is spent sleeping.
Cats?
That's why they don't get up for you. There's 66% of their life.
I'm coming back as a cat.
Is sleeping. Mm-hmm. For our beer lovers out there, Ivis, our beer lovers.
Do you like
Did
beer?
you know? Yeah, she's a whiskey girl.
She's a whiskey
girl. In Eastern Africa, Bryce, they brew beer from bananas. Banana beer.
Ooh.
I haven't had a banana beer.
I would actually
Anyone
like
wants
to
to
have
send me a banana beer?
I'd ever go to banana
I would.
beer.
I'd happily.
Use
happily-
Asahi as the...
banana beer. Obviously, I've got lots of plantations down there. A couple of experiments.
Okay.
You know, a bit of beer over here, throw a banana in.
Yep.
Oh, banana beer.
Yep.
So good on those people. But I'd never tried a banana beer, but I'm putting it down in my must-dos, my bucket list.
Yep.
Finally, Bryce, you know when we blink? You know, each day?
Yeah.
Do you know if we actually counted up the amount of time that our eyes are closed during that blink? How much time do you reckon we would spend with our eyes shut in just a 24-hour period?
Including sleep?
No, Bryce, just
Well, you
blinking.
said in a 24-hour period.
You're not blinking when
you
you're sleeping, mate. Your eyes are shut.
Well, you've got to set the parameters up.
Oh, how hard do I...
Here's the guy who thinks that bloody 3/4 is the same as 2/3. Hey? But then...
It's one row. He's still going on about that. One row is the ibis. Because normally, by the time I get to the theatre, that person's normally sitting in that row. So if someone's in there, the rule of thumb is you go the row below.
Okay, so when one of the managers here...
He hasn't let it go.
When one of the managers here says, Ben, I heard your podcast and I realise that you think that 2/3 and 3/4 is the same.
I didn't say. I just said one row.
If I missed the goal I was heading by the difference between 2/3 and 3/4
up the back, like 2/3. I mean, it could be a small.
Let's just help Ben out.
Now, for our new listeners, no one understands this joke.
Well, it was 2 episodes ago.
Anyway,
but I just want to help you out, Ben, because you are the bloke that follows a team that thinks just making the grand final is enough. So near enough is actually good enough for you. And there we go, folks. Hey, been waiting 2 weeks to close that one out. Here we go.
All right, so how long do we blink for, Bryce? Not sleep, because our eyes are shut. Blinking is not sleeping, right?
You said in a 24-hour period, which includes sleep.
Yeah, but I'm asking you how many times you blink.
60%.
Are you blinking in your sleep?
60%.
30 minutes, Bryce. 30 minutes. If you counted the amount of time that your eyes were shut whilst you were blinking throughout the course of a day...
30 minutes.
30 minutes.
That's what's my next guess.
Don't do that whilst you're driving, people.
There we go. Don't blink while you're driving. Very good, Ben. I did not know any of those things. I did know Jason, I've got to say, but for the rest of us, there was some really good insights there. Thank you. Ben, until next week.
Knowledge is empowering, Bryce, but only if you act.
Well said. See you next week, folks.
Hey there folks, Bryce Holdaway here. Before you go, if you're new to our community and only listen to maybe a handful of episodes, I thoroughly recommend that you go all the way back to episode number 1, where we unpack all of the foundations when it comes to property investing. Now for those of you that might be a little bit time poor, I've got good news for you. We have a binge guide that you can download straight away, which summarises the first 20 episodes where Ben and I unpack the foundational pillars of the A, B, C, D, and so much more. And you can get that straight away. If you go to thepropertycouch.com.au/TPC20, you can download it and consume it whenever you want. It's completely free and available now. And for those of you, just a quick reminder that nothing we've spoken about today constitutes financial advice. We recommend that you reach out to your licensed professional advisor so that you can look at your unique circumstances before acting on any information. Now don't forget, go to thepropertycouch.com.au/TPC20 and get your binge guide today.